It's the late 1970s. You're driving across America. On almost every highway exit, you see the same sign glowing in the distance. Holiday Inn. Everyone knows it. It's the safe hotel, the trusted brand, the place families pick without thinking twice. But while the whole country is focused on Holiday Inn, one investor, Peter Lynch, is quietly interested in a much smaller, almost boring-looking chain, La Quinta Motor Inns. It didn't look fancy. It didn't sound exciting. But that's exactly where the magic was hiding. During his trips across the U.S., Lynch kept noticing something strange. Yes, Holiday Inns were busy. But when he passed by La Quinta, their parking lots were absolutely packed, night after night. Car after car, full hotels, no empty spaces. This wasn't luck. It was a real-world clue. Something about La Quinta's way of doing business was clearly working better than people realized, and Wall Street wasn't paying attention. To figure out why, Lynch looked under the hood. Holiday Inn was built like a big, all-in-one hotel, restaurants inside, bars and lounges, big lobbies, conference and event halls. Impressive, but very expensive to build and run. Lots of staff, lots of maintenance, lots of overhead. Growth was possible, but it cost a lot of money. Now look at La Quinta. Their idea was simple: clean, comfortable rooms. No restaurant, no fancy extras. Just what travelers actually needed. Because of this, every new La Quinta hotel was cheap to build, easy to manage, and made strong profits. It was a simple formula they could repeat again and again, perfect for fast, profitable growth. When Lynch checked the numbers, they matched what he saw from the road. La Quinta's revenue was growing faster than Holiday Inn's. Their profit margins, the money they kept after costs, were getting better and better. Their debt was under control. Each new hotel wasn't just opening, it was adding real profit to the company. That meant the business could scale up quickly without becoming too heavy or too risky. Holiday Inn was still strong and famous, but growing meant spending a lot more money. The upside for investors was smaller. This is where the opportunity was hiding. Most investors were focused on the big, shiny name, Holiday Inn. Safe, familiar, easy to explain. But Peter Lynch saw something different. A smaller company, a smarter, leaner business model, a clear path to open more locations and grow profits. A stock that the market wasn't properly valuing. La Quinta had the potential to multiply in value many times over. What Lynch liked to call a 10-bagger. Lynch bought La Quinta early and held on as the chain kept expanding across the country. More hotels opened. More rooms filled up. Profits climbed. And the stock price followed, shooting up as the business grew. What started as a simple observation, full parking lots on a road trip, turned into one of Peter Lynch's most famous 10-bagger investments. The big lesson here is simple. A great company isn't always a great investment. And a great investment is often hiding in plain sight. By paying attention to the real world, watching how businesses actually work, and then checking the numbers, Peter Lynch turned a small, unimpressive hotel chain into one of his biggest wins. So next time you're out on the road, standing in a store, or scrolling online, remember, the next big opportunity might be right in front of you. You just have to notice what everyone else is ignoring.